Hey guys, how's it going? It's Spawn here with Team Bull Trading. I just wanted to go over one of my favorite trading strategies when it comes to day trading, and it involves using momentum and gap ups or gap downs. So let's go ahead and get started. Let me show you guys how I like to use this strategy. So first of all, what I would like to do is identify a gap up or gap down. In this case, we had a gap up on Friday. So we're going to go ahead and mark that gap, which is the candle open right here. And then the candle closed on Friday, right? I mean, on Thursday, I'm sorry. The candle closed on Thursday right here. So basically what this involves is basically analyzing what price is doing, um, identifying the market momentum, and basically combining both momentum and the price action, current price action to assess the or try to guess the next move. And in this case, we can see here on Friday, we had the gap up, price held up pretty well and then eventually sold off into Thursday lows. Let's mark Thursday lows right here. Thursday lows is right about here. We have a couple rejections here. One, two, three rejections, then the gap up. Um, I did write some shorts with the gang on Friday. I believe we entered somewhere around here. Shorted SPY. I'm sorry. We went long puts on SPY and made about 120% profit on this. We took an exit somewhere around here. Um, then, as the day passed, what I saw was something very interesting. So, what I saw was the bears filled bear gap after we closed the put position. Eventually, it filled, all the way down here, and it tested the Thursday lows. Then we had a really strong bounce, you know, really, really strong bounce that gave bulls some confidence. Now, the only problem with this bounce was the low volume. So I wasn't very, very convinced of a push to the upside due to this low volume. Not only that, but the Bears filled the gap. They had the momentum on their side. I was expecting some sort of pullback here and to scare off some bulls, and that's exactly what happened. The Bears pulled it back, chopped it for a couple minutes, maybe an hour, and then eventually proceeded to move higher. If you guys see that, we had pretty slow price action, very small candles, but look at this volume down here. The volume on this move up was pretty high. So you can see how the volume was increasing right here as price was moving up. So what is this telling me? So if we're moving with basically slower price action and with high volume, there's a high chance that we get a pretty good, pretty solid breakout. Um, and what also gave me more confidence was that the bulls managed to recover this much territory inside the initial gap up. So you can see how price was mostly contained within the gap area, which is this 560.7 and 558.3. So price was mainly contained inside of this area, and then eventually we had, this very strong breakout. And I signal in Team Bull that we had, a good chance of a push to the upside due to price basically holding the gap out, the gap up with high volume. You can see how we had this little pullback here, and then we had the little nice recovery, and then eventually broke out. And the contracts we had were like, I believe, a week out. So they went like 20% in profits here, started chopping, and then came in the algo time, and eventually, price absolutely nuked right here. And I believe we closed those contracts for about 50% profit. And you know, it was just a really good day, two really good trades, and you know, it went just perfect. But you know, it's a really simple strategy, guys. It's just finding the momentum. You know, here there was no bears to sell the price, so we gapped up in the overnight session. You know, bulls couldn't maintain the momentum of the gap up. Eventually, you know, they sold down back into the gap, you know, attempted to push higher, you know, failed. We tried some puts here, you know, ride the wave down, close it, and then we just waited for price to do, you know, its thing and give us another setup to potentially grab some more trades. And, you know, we had to wait quite a bit, but eventually we caught these really nice calls and, you know, they paid very, very well. But you can see how, you know, the overall structure on this push down. We first had the push up, then the push down. You know, the bottom of the gap, I'm sorry, was being support, you know, bounced, broke that support, and then bounced again. And then, you know, we built support again. So a lot of activity going on right here, guys. A lot of activity. So what this is showing us here is that there is a lot of participants down here at these lows. Okay. So the only thing is that there is low volume here at these lows. So we need to be careful and try to find the volume first. And the volume came in right here on this move up. Now we had some really nice consolidation here, and we had some really nice volume. So I entered some, I believe like a 5-day out contracts or week out contracts on SPY, some calls. And I think most of the drawdown that we got was maybe 5-6%, which I think was, you know, really, really good. And on this entry, my stop would have been, let me just delete these lines right here so we can see a little bit better. On this entry, my stop was going to be just under this right here. So why this right here? Let me change the color of this. So my stop was going to be down here because price action above this had basically bullish action. You can see here in the past, and we can even extend this a little bit further back over here. You know, price action above this had bullish action. Price action below this had bearish action. So I took an entry in calls right here, you know, had my stop right here. I selected, you know, the contracts that would allow me to not risk too much if, you know, price fell under this, but that would move just enough to get me some nice profit to at least get a 1-to-1 risk reward. And I think, you know, it played out perfectly. We had almost no drawdown. Price didn't really chop that much. And eventually, you know, we hit our target of what's it called? Thursday highs. And why was Thursday highs a target? Well, you can see that all price that was holding above here either got rejected here or here. And honestly, guys, if you take a look at the Friday session, I mean, and just the overall momentum across other tickers, there was really no reason to reject here in this area at 562. And I just kept holding to my position, full position, into the 564 gap fill of, there's a gap over here. Let me go a little bit further. That's actually my trading view that's not loading the price over here. But there's a gap open. Oh, there it is. Okay, you can see how this gap was filled, basically. Sort of filled. You can see how this 464 was a very important area, and the bulls really needed to go and, you know, get that spot right there. And let me mark this really quick so you guys can see it later on. So you can see it right here. You know, 464 area was obtained right before close, and just the overall trade was immaculate. But that's all for now, guys. I wanted to show you this really simple trading strategy that I like using that involves using momentum and gaps. And I hope this is helpful. If you like the video, make sure you go like and subscribe. I will be uploading more of these videos throughout the week, maybe. And also, I will be uploading my weekly prep videos for you all.